Hi, and welcome to Slot Leader, a Cardano finance podcast where we try to bridge the gap between the world of finance and the world of blockchain technology. I'm your host, Umed Saidov, and in today's episode, we are going to continue our conversation with a finance professional and a blockchain enthusiast, Bobby Henebry. He happens to be a CFA charter holder just like myself and has gotten into this space earlier than I did. And in today's episode, we will explore his thought process as a financial professional about this particular asset class. I hope you find this interview useful and hopefully you will find some insights about how the financial professionals think about the space. And we have some interesting developments we're going to cover in the news section of today's episode. So stay tuned for what's about to come. As always, I would like to remind our viewers and listeners that Slot Leader is an educational podcast, and as such, we do not provide investment, financial, tax, or legal advice. 2021 just started, but boy, do we have a number of positive news events that took place in the blockchain industry. The first one I would like to cover, which is quite significant, and people may not realize that, is the OCC's clarifying letter to the federally chartered banks in the United States, giving them pretty much a green light to use public blockchain to transfer value. It is very significant in terms of both the regulatory clarity and in terms of economic potential of that it brings into the open blockchain. And the reason why I mentioned that, it has to do with what's at play. And what is at play here? We will say that when the banks start migrating their backend infrastructure to actually start using the public blockchain to settle transactions between each other, they will be moving away from something else. And that something else is the ACH network, which they have used extensively so far. And it has been one of the few, or maybe the only game in town for transactions between the banks. I'm not counting the wires, I guess. But I have pulled up some statistics about this network and what how many transactions they produce and what the volume is. And it should give you a sense of what market size we are talking about. We have a narrative around Bitcoin, basically, trying to replace the gold and it being a digital gold. And every time there is a discussion around the role of Bitcoin in people's portfolios, people talk about how early we are with Bitcoin, representing the value, the store of value sort of marketplace. So the market cap of Bitcoin is often is compared to the market cap of gold. And here, the same thing kind of applies for public blockchains like Cardano that could facilitate the transfer of value on their network and creating value that way. So what is at play here is 55 or let's just round it up, $56 trillion worth of US dollars being exchanged every year using the ACH network. Now imagine a scenario where the banks slowly transition, or maybe even fast. It doesn't really cost that much to open up a wallet in the Cardano ecosystem. If they started to use wallets and a secure blockchain like Cardano, how much savings they would have. So my sense is that public blockchain completely decimates and disrupts this industry because it's so cheap to maintain and transfer value, and the fact that the settlements in case of Cardano is instantaneous. There is no counterparty risk that you're taking there as long as you have identified the address of the bank that you're dealing with. You can whitelist those within the bank. You are good to go, and it just brings enormous value to the banks and to their clients, for that matter, because they will be able to leverage the public networks infrastructure to settle immediately, and that creates a lot of value for clients of these banks. So what are we talking about? So 55 or 56 trillion dollars being transferred every year, and that number will grow as the economy grows. Now imagine if the public blockchains like Cardano are capturing 10% of that value going forward. And that basically is translated into the pure value to the Cardano ecosystem through transactions, transaction fees. I haven't done the detailed analysis, but if you are interested, I would be more than happy to crunch the numbers and dedicate an episode to this, because it's such a significant and fundamental shift in the policy and the economic sort of landscape of transfers in the United States, at least. So this is the first sort of significant news event. The second one I would like to cover today is the publication by the CFA Research Foundation. For those of you who don't know, CFA Research Foundation is an authoritative publication that is read by millions of financial professionals, and when they issue reports, be sure that they are really high quality and they are read by many financial professionals. This marks, in my view, the beginning of the adoption by institutional investors of cryptocurrencies and crypto assets like Cardano. And in their preamble, they talk about cryptocurrencies actually becoming more prevalent, and they are here to stay. And rightly so. It's a nascent asset class that needs to be clarified. A lot of frameworks need to be developed to fully evaluate its economic potential. But there is no doubt, in my mind at least, that this asset class generates value. Maybe it shifts and the economic activity from the current incumbents to open blockchains, but there's no doubt in my mind that it creates value for the global economy to facilitate global economic activity. So I will read this report, and I might give you guys my view about what it represents and how to think about it. But it is a very significant event, as it opens up the space to professional institutional investors to start thinking about adding cryptocurrency and digital assets in general into their clients' portfolios. And we're talking about trillions of dollars here being allocated to this asset class, perhaps as a result of being exposed to this report in the future. Again, this is just by this is my general assessment about the potential, but the fact that there is an active body of research that's being conducted by an authoritative a body like the CFA Research Foundation bodes really well for the space. So those are the two very significant events that I would like to point you guys point your attention to and share my thoughts. But if you are interested in going deep down and you would like me to cover either of these events in more detail, I'll be more than happy to do that on one of the AMAs that I infrequently do. And or dedicate an episode or two to these two events. They are quite significant, again, as I was saying. Bobby, is cryptocurrency or crypto assets or digital assets, what have you, is it a new asset class?
I believe it's a new asset class, yes. Other people would say no. I believe it is. And the other thing is, it's not just a currency. It's not just an equity. It's not just something speculative. It's not just a store of value. It's not something that's we haven't touched as much, but the platform aspects like the Cardano and Ethereum, back to why I invested in Ethereum, there were other things that it does with programmable code, and tokenization and really cool stuff, right? And so it's not any single thing. It's very diverse. It has elements of all the other traditional assets plus new features, right? And as a result, there's different regulatory perspectives, and there should be robust discussions around it, and it be issued in ways that are safe for the average consumer. I'm a big fan of that, and growing in a responsible way. But it's very different, and I think of it in a different way, as a different asset class in my portfolio.
Absolutely. Now, also, there's another thing that I'm going back to the point you made earlier. It's important to note. It looks like, and I know from very little I know about the financial history, it looks like that I'm seeing a pattern. Every time there's a new type of financial instrument, the existing sort of traditional financial elite, let's put it that way, is very skeptical about it. And I think it brought me back to the CFA conference in New York that I attended. I think it was 2019, where the speaker, I don't remember quite exactly, but I think he was a CEO of one of the insurance companies. He was talking about equities being looked at down upon by the financial elites at the time because they thought it was a Ponzi scheme. It's just a scam, and not a lot of people believed in it. And I think the father of fundamental analysis, uh, basically Warren Buffett's mentor, uh,
Charlie
came up.
Munger, are you talking about? Or are you talking about Phil Graham?
Bill Graham. Bill Graham came up with a framework to analyze these new assets back in the day, right? Now, fast forward, 80 years or whatever, and you've got yourself a completely new. Nobody questions equities, right? And that's one data point that I kind of is in the back of my mind every time I look at crypto. That data point basically is there to remind me that every time there's innovation in the financial industry, there's a big pushback by the incumbents because they do not understand it or they cannot accept its utility. Now, the
Well, it's
second,
not just it's not just and I know, well, I'm
yeah,
excited too.
yeah,
It's not just currencies. Any industry, the entrenched player is always going to resist. Okay, and then new entrant. I mean, just even Steve Jobs introducing this little device that has 1,000 songs in your pocket. Totally different from record companies, right? Any industry that has an establishment, that is just it's human nature. Okay, and crypto is just another forum for that same robust discussion for happen because there's diverse needs and interests on all sides.
yes. And the second thing that I wanted to mention, Bobby, was because you might say, oh, it was just one data point. Is it valid, right? We're going to fast forward to, was it 60s or 70s when derivatives were introduced? Warren Buffett is quoted as saying that derivatives are the weapons of mass wealth destruction. I mean, he's right in a way because they are quite volatile, and their pricing basically forces you, in the case of options, to basically have a leveraged position. But you cannot argue against their added benefit and how they stabilize the markets. Talk about corn or any commodities you can think of. The farmers wanted to lock in a price and basically make sure that their market risks are taken care of, and pass on that risk to a financial intermediary. And whoever is on the other side, they were gambling or having a position or an opinion about the prices, and they would take the other side. Now, people were reluctant to derivatives markets back when they were introduced. And fast forward X number of years, we've got robust, derivatives markets. There are, in some cases, far outpaced in terms of volume the underlying assets themselves. And do you think this history is repeating itself with cryptocurrencies? And I'm not talking about you actually nailed the whole point by saying that cryptocurrencies are not just currencies. You could just think of them as a completely separate unit.
They're a hybrid. Yeah.
Yes, they could be, a unit that in the Cardano community, for instance, a unit of ADA. You can use it as currency if you want to, but
And
it's
you
the
can
same.
attach code to it for it to do other things. I can't do
Exactly.
that with my dollars, right? I
Yeah.
mean, it's just, it is like all the other things we've discussed, and it's different thing. It's a hybrid.
Yeah.
And to your question about kind of derivatives and whatnot, yeah, I mean that to my major point of like, yeah, all change is hard for everybody, and and the entrenched players always have one perspective, and then the new players have different perspectives, and then that new technology or new protocol or derivative or whatever it comes on, and the market either adopts it or it doesn't, and it's always imperfect. Okay, and that's the thing that's important for people that are choosing to get in this space or not. There's some things that can work, and there's some things that can go against you too, whether it's your personal situation or just kind of the general adoption, because it's just it's getting 7.5 billion on people on the planet to agree on one thing is pretty hard, right? I mean, and a lot of people are like, oh, it's going to be, everybody has to use it. No, not everyone does have to use it. That said, there's a lot of room for adoption for the payment side, the smart contract side, the platform solutions that Ada and Cardano kind of represent, that are providing things I can't even begin to understand, and other people don't understand, or some people do. And that's what's cool, okay, is you're bringing it to market and you have to prove that it has value and solve problems for people. And if it
Yeah,
does that, it will get more adoption.
absolutely. And I think in Cardano, we are trying to basically solve real problems in a sense. We want the software to eat the world and do it very cheaply.
Yeah.
To your point of losing your SIM card and whatnot, that wouldn't have happened in the world where Cardano is actually ubiquitous, because you will have an ID, and that ID is attached completely to you. And
Yeah.
maybe you need your biometric input in order to unlock it and present it to whoever is issuing you the SIM card, and nobody would be able to actually come in and claim that they are a Bob Henebry and get the company to issue a SIM card.
And that's an expression of, if ultimately, if we are the the biometric side of things, which you're touching on, like that is likely the safest. All those of us that watch Mission Impossible movies with Tom Cruise and the mask that they put, I mean, that's kind of like almost like a sci-fi end of it. But yeah, but in the interim, the SIM swap certainly is a concern, but still, like, all of those solutions aren't necessarily there yet, because there's people that have an interest, and especially bad actors, there's always this tension where they're trying to get around and figure out how to, and they can do that with traditional assets, figure out how to break into your, a friend of mine, his father was closing on selling an office, and he had all the paperwork in place, and right before the transaction went through, he got an email from his lawyer saying, hey, or the lawyer got an email from him saying, hey, send it to this account. Well, they had just changed like a 1 to an L in the email address or something
Oh,
like that. So it
wow.
looked like it. The lawyer didn't double check verbally and sent the money across the planet somewhere else, right? And that's, so bad things can happen even in existing trusted systems, right? But directionally, what you're saying is, how do you that's the debate, is how do you have more security and control? And Cardano and Ada are making a case for it. Bitcoin and cryptocurrencies and blockchain have made a case for it in different ways for different reasons. And as long as these conversations happen, I think, as in an intellectual and emotionally kind of honest way, I think that helps the world find ways to have better solutions to solve the existing problems, right? And that's what you're doing. That's what you're talking about. And I admire your willingness to get out there and lead a conversation to help enroll people, to help kind of make the world a more interesting and better place.
Here's another question, Bobby. Do you think the traditional financial system is inherently more prone to frauds? I am touching upon this because I know that a lot of frauds that happen, and there's another show that I kind of like to watch. It's called American Greed. And when you look at the type of bad actors and the mechanisms that they use in order to propagate and conduct their nefarious actions and go undetected for years. In case of Madoff, it was 30 years of bad, Ponzi scheme type of thing going on. Do you think the fact that we have ledgers, right? We're talking about ledgers, right? That are, you know, in a way that we don't have visibility in a ledger of a single company. And these ledgers don't talk to each other. There's no consensus behind it. That this type of balkanized environment creates a fertile ground for nefarious actors to conduct their businesses and nefarious actions, and that in turn requires the regulators to step in and put in robust governance structures and rules in order to basically reduce the chance of those kind of activities. And more importantly, do you think an open blockchain where the transactions are public and could be easily audited, they are public but not necessarily uh, you know, uh, identifiable. But if imagine that all the companies or companies in certain countries are conducting their business on a blockchain, which is verifiable and undisputable. And if they do something, it would be recorded. And if the government, let's say, comes in and requires them to pull up the records, uh, they don't have an alternative reality to show to the government or whoever, or the investors, whoever is doing the due diligence, to actually propagate and perpetuate their scams. Do you think blockchain provides that robustness that the current economics, the financial system or the record system of record keeping in the developed markets cannot?
I'm reminded of, if you ever watched the movie Jurassic Park, and Malcolm is there, and he's like, nature finds a way, right? They've got, we've got boys on one side and girls. We've genetically engineered them so they can't mate and all this stuff. Well, they use frog DNA, and apparently some sort of frogs can like be both male and female. And then they started mating in the park, and then everybody, a lot of people died and all that stuff. I mean, yes, I'm referencing science fiction. Yes, I'm very clear on that. Nature finds a way. And what you're talking about is, I don't know whether or not the current system is fertile ground for fraud or not, but what I do know is there is something in human nature and self-interest that makes some people do things that are fraudulent. Okay? There is something in human nature that different people's self-interest is not always aligned with other people's self-interest, and they find ways around whatever the system is. Okay? And so inherently, is blockchain a good solution? Yeah, I believe because the distributed ledger and the way that it lets truth be known in a distributed way, I think is fascinating and fabulous, and a lot of really good conversations are coming out of it. Right. That said, I don't think blockchain is going to be the perfect solution for everything that I can't see, because nature will find a way. Human self-interest and greed will find a way. And I'm not justifying it. I'm just acknowledging that it's been that way for ever since the dawn of time. And okay, fine. So then regulators, all this stuff's on a blockchain. Well, then, all right. Well, the guys that are and gals that are the bad actors are just like, all right, well, we'll do the things that should be compliant in the rules of the blockchain, but then we'll leave stuff in another system, or like people that have bad intent, they're gonna find ways, and that is not about blockchain. That's about human nature.
Yes.
Okay.
No, I mean, I see this stuff being, in the crypto. I see the the inventiveness of fraudulent actors
Yeah.
every day, and I don't want to say that I admire that, but they are very
Oh,
resourceful. But the fact that they ask, for instance, I do some fraudulent act, I misrepresent something, and then I take your money. um, for law enforcement, for instance, right? It becomes much clearer to where to look for that money and how to trace it
yeah.
and find the person who is responsible for it. And I
And
mean,
it
I
depends on the
understand.
rules that are the trigger. I mean, back to if it's coded or what. I mean, another example back in the fiat world is this book Red Card about the FIFA scandal. I mean, there was all sorts of bad actor stuff, wiring money, and all that in the traditional system. And then eventually, these guys found out, and they were able to trace back to the bad actors and kind of get them out, right?
Yeah.
Okay, that was bad actors using a traditional system in a bad way, but the system kind of result. It's not always perfect, but back to kind of like, well, in the situation you're outlining, yeah, you're right that having kind of more transparency and helping law enforcement or regulators track whatever the bad behavior is, I think that's a good thing. The question is, what is good or bad to all the parties involved, and how are those rules established in the code or at all, and does that work or not? And there are scenarios where it will, and there are scenarios where it won't, and that's the complexity of the devil being in the details on how the tool is used, right?
Yes, yes. No, look, I mean, look, the current regulations and that are put in place are quite effective in trying to curb the major part of them, which is why
Yeah,
we have a thriving economy in the United States, at least. If
yeah,
there are good regulations put in place that encourage good behavior and competition and innovation, it will inevitably do that. The country and the economy will move in that direction. The question is inherently, it's like, let's say that you have 5 entities involved in a fraud, and they have complete control over the ledgers, and they decide, like in the case of Enron, just basically shred the documents. They can do
Yeah.
that. They, you in the case of blockchain, if they had conducted their business, if they were, more importantly, forced to do that because that's the only option, then the discussion, and more importantly, the types of resources the law enforcement will have to spend in order to uncover these things would be quite significantly lower, because all you need to do is just to find the first transaction that is identified as the beginning of that fraud, and then you will be able to see various different kinds of patterns emerge. Now, that being said, there are solutions that are quite anonymous, and nefarious actors can use those. And I'm not saying that I'm completely against those, because I think people need to have an option of privacy if they want to conduct their economic activity in a private way. I think it's a right. It doesn't automatically mean that you're a bad actor. But yes, so that's basically a clarifying thing. Now, I want to move into the regulatory side of issues. I don't know if you've noticed, but recently we've seen the Treasury Department issuing as a new set of rules for exchanges to basically collect identifying information every time you send a transaction that is over $3,000 equivalent to a wallet that is not custodied with another institution that's regulated. It creates a burden on exchanges at the very least.
Yep.
And also, we've seen a legal action being taken by SEC on XRP. Do you think going forward you see any regulatory issues popping up in this space?
Well, yeah, there's always going to be regulatory conversations. I'll put it that way. And and at least in the states, I like to believe, this is an opinion, that regulators are working on behalf of the average person who doesn't necessarily have the same level of understanding that you or I do in certainly crypto, or maybe even in broader financial affairs. And so there are certain things that they're monitoring to make sure that the average person is not taken advantage of. And I think that's a good thing. Okay. That said, in how they do it and how they monitor, it's always tricky, and there's no perfect solution to find. Back to nature finds a way. Bad actors find a way, and they're trying to snuff out the bad actors. That's their priority, which
Yeah.
sometimes creates these other rules that may be imperfect, but have a good intent from the regulator standpoint. Okay, and I'm coming from an American lens to different regulators in different industries, or even countries in some cases, are not necessarily looking out for the average guy. So I'm not, regulator is different depending on which regulators we're talking about. Okay. And so so yeah, I think there is going to be more regular, and there needs to be a way for and the PayPal CEO brought this up. He's like, hey, we've been proactively working with regulators to figure out what's the most compliant way to do it, because regulators see things that practitioners don't see, and sharing of knowledge, back to what I said earlier, how does the entire community, even people with different coins or different blockchains or different opinions, come together in a constructive way, and not just work in a vacuum, but work with the community and also in their countries and with regulators to find a solution that works for what is a very dynamic world with different people with different needs. Okay. And so that's my opinion on it. And there's a balance that's being struck, and sometimes it's not as perfect as it could be. And that's life, and that's prototyping, and that's just the nature of things, is my perspective on it.
Perfect. Now, in terms of institutional investors, we can go back to that. I've seen a spike in interest in Bitcoin and other cryptocurrencies, and also I've seen that we have more products available for institutional investors. The recent creation of a top 10 crypto asset index fund by Bitwise is a
Yep.
perfect example of that. And when I look at the prices of these assets, of these tradable assets in the institutional world, where the institutions can get exposure to that price action, let's say, I see huge premiums being paid by institutional investors. Why do you think
Yep.
that is?
I think because for a lot of the average investor, Bitcoin and crypto, back to that bubble chart I shared, is still kind of a mystery. Like, they know there's something there. They may have an opinion on, well, PayPal's in, so I think it's going to get more adoption. I mean, there's still a lot of price volatility and risk and all that. And then people hear about the sim swap issues, or this CEO or of this firm passed away. The Canadian example of the firm, I think all of us in the space heard it, and then the password was lost and people couldn't access their crypto. That makes people nervous. And so as a result, I think what the premium is, and in some cases like 2% management fees just to hold like what you could buy
Two and a
on
half.
Coinbase
Yes.
and for just a single transaction fee in and out, but annual fees. I think the reason that people are willing to pay that price is because they trust the entity more to figure out all these mysterious things that they don't know how to figure out, or they don't want to take the time to figure out. So they're outsourcing it effectively by hiring a manager, and they're paying a premium. But they're also willing to do that. I think, I don't know, because everybody does it for different reasons, but I think it's also because they say, gosh, this is an asset class that could really grow significantly. So what's 2% in an asset that's up 200%, over a period of time, or 100% over a period of time, right? So, I think for them, there's a cost of doing business, but it's still an inefficient space. And inefficiencies generally mean higher kind of risk premiums and fees. And I think that's what's being reflected. And also for the funds to do it, there's risk for having the fund. And if they have a custody issue, they need to make sure that they have enough cash flow to hire a quality team, to hire the right legal advice, to pay the insurance contract. There's other costs of doing business that's on a burden of the people that are running the funds, right? That choose to go to the provider. So it's a market, right? And the market is forming, and that's a market price that works for certain people for certain reasons. I personally have chosen to do it in a different way for different costs, but I'm more comfortable leveraging, online, or having, cold storage solutions and all that stuff. That's just like, some people are like, I don't want to remember another password. I don't want to do another thing. I trust you, third party.
Yes.
Okay.
Now,
So
when I talk about premiums, you definitely nailed the issue in the head with 2.5%. But I talk about the price versus net asset value. It's 4 times. If you
in the funds, the
Yes.
premiums and discounts on the funds.
Yes.
Yeah.
So
And that's
if you're buying the top 10 crypto index from Bitwise, for instance, the market price is 4 times the net asset value, which is crazy in my financial sort of experience. I've never seen these kind of gaps or inefficiencies. Do you think the price that this crypto index fund is fetching in the open market, where there is a lot of capital, is the true price?
That's a market, okay? And there's animal spirits are in that, okay? And price is where supply and demand meet, okay? And so that market is willing, apparently, based on the information you've shared, to price it at that for the reasons they choose to price it, okay? Whereas the underlying assets, if you were to assemble that on your own, what you're saying, is, gosh, I could assemble it on my own. But the people that are paying it, I think through their behavior or through their own lack of knowledge of how to do it on their own, that price information is signaling something, that there is a willingness for a premium, because they can't figure out how to do it on their own. So they want to get in something right now. And also this price run up, people are chasing it. They did it in the last cycle, and buying things after big run up, if you believe in mean reversion, has a different level of risk too.
Yes.
Okay.
But these are institutional investors we're talking about, because these funds are only available if you are an accredited investor or an RIA.
Well, not every institutional person is as sophisticated as every other institutional person.
They need to hire us.
Well, I don't know. Maybe not. But it's just, there's a reason they're doing it. Okay. And I don't know their reasons, but it may be because of the timing, and they're like, gosh, I want to get in now. And so they're putting, but then on the other end, they're investing, but maybe they're only investing 0.1% of their assets. Or maybe they're investing 5. I don't know what their personal situation is that says they're willing to pay a premium in an asset class that's in a run up. Right?
Yes, but my point is that,
and that drives, I think, some of these premiums that you're seeing in the asset.
So my point is that if let's just have a hypothetical situation, if the floodgates were open, right, and any institutional asset manager would have a very easy way of getting into this asset class and getting out. And I understand that there are choke points right now from a regulatory or a custodial point of view, which is why Bitwise in there is raking in all the cash. But I think the fact that they have already cleared the regulatory hurdles to create this fund, more will follow. And as more
Yeah,
funds get created, maybe these premiums will dissipate and go away. But
I would think so. Yeah,
but
yeah.
wouldn't you, as a mom and pop person, whoever is in the crypto,
Yeah.
feel quite good that you are paying a price that is 4 times less the institutional investors have to fork out?
Yeah, I mean, I would. Yeah, I mean, you know the answer to the
Yeah.
question. It's obvious. Yeah, would I rather pay a quarter of the price for the same asset other people are paying? Yeah, of course. Yeah, that's simple math.
Yeah.
Okay, I mean,
But maybe
but to
yeah,
your point,
yeah,
there are new funds coming on every day because the custody issues are an issue, right? Like I want to make sure that I really understand the custody and I'm not gonna somebody's gonna hack in and steal it, or I've got the right governance in place, and and then what's the right portfolio decision. Meanwhile, there's way more demand out there because of the animal spirits. Animal spirits are powerful in any market. Okay, in crypto, when it's rip roaring and it's at all time highs like it is now, well, guess what? People pay attention to it, right? And that's Mr. Market. Back to kind of Ben
big grant.
Graham,
Yeah.
Fisher, and all that, right?
But
And so,
we also have seen an unprecedented money printing in the last couple of years, right? So that
yeah,
might be an explanation for maybe the asset prices are being reset because there is such a big supply of money and they're chasing returns. That actually brings me up to
yeah,
brings me to another question. With equities and bonds priced beyond their reasonable thresholds at this point, and the amount of money that's being released into the economy, we have another what 900 billion, or is it 900 billion dollars basically coming into the system. Do you think the digital asset space is a place where one could seek growth in real returns in the foreseeable future, especially if you take into consideration the supply? We haven't touched upon that, by the way, the
yeah.
supply side of things.
Well, first off, if we just focus on Bitcoin, 21 million Bitcoin that can ever be released, 18 and a half, 19 million that are in circulation, right? With the remainder waiting to be mined. And then there's the difficulty rates and scarcity and other things that kind of regulate it, all that. There's very clear rules on what Bitcoin is and a fixed supply, which Bitcoin people call it digital gold for that reason, because it was invented in a spirit that's similar to a fixed supply in a digital asset that also mimics what a physical asset is, gold, back to our discussion earlier,
Yeah,
right?
yeah,
So in an inflationary environment, when there's a bunch of liquidity in, people generally go to a hard currency, to gold and other commodities, right? They view that as a store of value or a hedge against kind of government uncertainty. Okay, that's just always been a way that we as investors generally behave, right? And there's debates around that. I won't get into it, but that's what's there. So Bitcoin, for a lot of people, the reason they buy Bitcoin is because they view it as a substitute for gold or a supplement to gold. Okay. But there are other cryptocurrencies that are not fixed supply. So there's a diversity in the crypto ecosystem, and there are different reasons to buy different digital assets. Okay, but in the more fixed quantity store of value mindset, back to crypto isn't any one thing. Digital assets aren't any one thing. Some people view it as kind of libertarian. Hey, I just want to have my own, forget central environments. I like this decentralized. Some people like it because they view it as gold. Some people like it because of the transaction time. Some people like it because it's nerdy. There's all these reasons why people choose it. But certainly with all the liquidity, quantitative easing coming into the system, and if you look at returns this year from gold has done better than, or excuse me, Bitcoin has done better than gold has done better than equities, directionally says, okay, Bitcoin's kind of working more towards gold, but there's also something else in it. Okay. But also, Bitcoin could easily do a correction like it did back in kind of 2012 to 13 timeframe. Could do a correction just like it did 17 to 18 timeframe, right? I mean, it has volatility, but I personally believe longer term that people can view it as more of a solution, Bitcoin specifically,
yeah.
um, in the face of a bunch of liquidity coming into the system. And the liquidity is coming in because of maximum uncertainty around the coronavirus and other political and economic issues, right?
Yeah.
Um,
I mean, honestly, Bitcoin as an asset has already established itself pretty strongly among the corporate America. We've seen people. The MicroStrategy CEO has invested $1.2 billion in Bitcoin, and he thinks, and his reasoning behind that is that it's a perfect sort of treasury asset to hold, as opposed to cash, which might be devalued at a faster rate now that we have seen so much monetary stimulus coming into the economy. Um, I think he probably thinks that, that there's no way you could get out of this much money printing, and something's got to give. And his solution is to buy Bitcoin for his company and his treasury as a treasury sort of asset. And I think other companies have followed suit, and I think the latest person who's started going in there was Elon Musk, which is also quite a significant sort of event.
Yeah.
Now he started asking about it, but it doesn't mean that he started buying it. But I wouldn't be surprised if more CEOs kind of entered this space as a way to hedge the uncertainty, as you say, the governance uncertainty or government uncertainty surrounding the monetary policies, about where the direction is going to take us from now. Now, with that being said, can you share with us, in your view, what is the economic potential of asset platforms like Ethereum, Cardano, and can they redefine commerce, savings, and a slew of economic sort of sectors worldwide? And I know that we kind of covered this question here and there, but if you have any other thoughts about that, because you were an early adopter in Ether, for
Yeah.
instance, would like to basically,
Yeah. No,
get
I think there's more space for them, um, and they're working on a range of solutions, but also like they're positioning themselves, whether it's smart contracts or identification, like you're talking about, or just kind of other programmable aspects or tokenization, right? So how do you kind of use Ethereum as kind of the protocol for you to issue a token that's your own kind of token, but it kind of is kind of borrowing that kind of open source framework in the platform. There's a lot of cool things there, but ultimately people have to choose to adopt it or not, right? And so that's what makes the platforms interesting, is they're saying, here's what we do, here's how we do it. And so in a way, they're waiting for kind of consumers to come to use them. And so to me, that makes them, it's a totally different conversation relative to just Bitcoin. Fixed amount, it's a proxy, for gold, digital gold. Although there are some programmable aspects on, you can hash other things, store things on a Bitcoin blockchain that are not just straight up Bitcoin, right?
yeah.
And so, but it was more limited, which is why Ethereum came about. And Ethereum, there's trade-offs there, and that's why kind of the Cardano community came together to work on similar and different problems. And ultimately, it's on them to figure out, all right, can we provide solutions for? But to your point, all fascinating stuff. Okay,
Absolutely.
but also it's very early adopter. It's very early adopter, and not everyone on the planet is an early adopter or needs it. And there are
Yes.
other solutions too.
Yes, I think that's one of the things. Who in the world is talking about TCP/IP or SMTP? Although these are protocols that drive the traffic in the internet right now, and there are no hard the camps of like FTP protocol enthusiasts fighting the other guys, saying that, oh, my protocol is better than yours. And the reason why we have these kind of discussions in the especially on the crypto Twitter that I follow, is that there's monetary value involved, and people want things to work, and they're rooting for their own platform to
Yeah.
become the dominant one. So it created its own sort of ecosystem. But my disappointment so far with Ethereum and other cryptocurrencies has been that they haven't yet gotten out of their bubble to solve real problems. And that's something that gives me a lot of hope in Cardano, although we have our own challenges, of course,
Yeah, of
is
course.
that we are trying to actually have real world solutions for real world problems, and we don't have to sort of be the another platform that creates another crypto kitties 2.0. Although I have to say the NFTs are quite important. I just got exposed recently to a bunch of art that looks amazing, And I thought to myself, future could be going in that direction. If instead of buying, the famous artists and whatnot, and having to endure the cost of putting it in a right place, and then make sure that you pay the insurance and the security guards to make sure that nobody steals it or replaces it with some fake. I mean, there are a lot of frictions there that you need to sort of sort out
Yeah,
in
and
order
it's about
to
market
evolve.
adoption. Everything you're talking about, and you're saying, "Gosh, the market should adopt my platform," and the other guys are saying, "No, the market should adopt mine." And everybody, there are valid points on all sides, and there is no single solution.
Absolutely.
And the more the community comes together and works in a collaborative way, then the signaling to the world that's not paying attention to it gets more people to choose to adopt the systems, which just have different trade-offs, right?
No, you're right, and I think I read this. One of the things that this space actually triggered me to do is to read a book about money. It's called The History of Money by Jack Weatherford. He wrote it in '90s, so it's untainted by Bitcoin maximalism or any other things. If you want to venture into this, but one of the things that the key takeaways for me in there was that I started asking myself why gold was adopted as a currency back in the day, right? And the revelations from that book was that gold was a preferred method of payment uh, for merchants in the Middle East or Mediterranean that preferred that method of payment, and ultimately it took over the world because everybody wanted something. And that something was available through that currency. So when we think forward, I think going forward, the adoption of a cryptocurrency or a digital asset will have to follow that utility. So as long as you provide
Yeah.
utility, my apps on my phone could run on Cardano, and I wouldn't know about it. And in that world where my apps that I solves up a problem for me, where I use it every day, runs on a platform that provides that utility. Um, we could safely say that is the adoption, and we have reached a point where the cryptocurrency is actually realized its potential. But we are far from that, because the types of apps where we see, even the DeFi's, I don't know if you've been following, that we've seen, they are creating the types of instruments that already exist in the financial industry, but making the same mistakes that we did probably 80 years ago or not.
Well, and this is one of the problems is the people. I mean, I was talking to a startup group in Russia a week or two ago, and they were like, "Well, we think X." I don't want to, but like they didn't realize there's established markets for securitization and breaking things up, and it's like, geez, you're designing it in a vacuum, okay? And this is one of the problems that you're touching on, is like everybody thinks that it's it's impossible to know everything you don't know, okay? And so the world reflects, in a way, a completion index of the historical debates and discussions, which you've dug into, but not everybody does that. So then some people are designing in different vacuums with different trade offs, and there's a switchover cost. So if you've created something like, gosh, Cardano or Ethereum it would work just as well as the existing system. Well, great. Well, there's no reason for the existing system to switch over if it does exactly the same thing the existing system does, unless
There's a
there's a
cost.
benefit that exceeds the switchover cost. Okay, and there has to be, and this is where the community, I think, there's an opportunity in kind of in the role. I guess I'm saying I'm a liaison between business and nerd and technology, and I say that in a respectful way. I'm a proud Georgia Tech nerd. Okay, like I get it. I'm a minor too. I was a minor, right? But it is, hey, you have to build a business case that's not about your interests and your project that everybody should pay attention to, which is classic venture startup 101. Like, hey, you got to get outside of yourself. You have to be able to convince the other person and show real value for them to choose to invest, because they're taking risk on, because you don't know their system. You don't really, and you don't know the costs, and there's always unexpected costs. And so everybody needs to kind of manage their expectations in order to have a constructive conversation about, all right, here's the value that I think I can provide, or what are your problems, and then design solutions that meet the actual business community's problems or the existing platforms, so that they actually have an increased probability of adopting your solution.
No,
And that's just a
yeah.
classic entrepreneurial dilemma.
No, currently, I think we have cases where, I'm on Cardano ecosystem, right? I have an app, it's a wallet, and I use it. I don't even care what it's using in the back end, but it's connected to a blockchain, and it allows me to send money anywhere I want, less than 10 seconds. Whoever has got, the other side, to whoever I send it, it will get it. And the transaction costs are in a fraction of a cent, and they will remain so because the system was designed in such a way that we could, through the voting mechanism, we could keep it low and make sure that all
Yeah.
developers will come onto the ecosystem. And in Cardano, that's another a differentiating feature of Cardano, is that it's based on UTXO accounting model, which is Bitcoin based, but also has an accounting model, which is it actually has a hybrid type of accounting system, where and the max supplies also fixed. The emissions are fixed, which basically takes the best of both worlds. And in my case, it just uh, commands more respect because I know the supply side of things. Which brings me to the question of supply of digital coins. Do you think, in your experience, the supply of an asset is important? When I look at Bitcoin and its success, I cannot, um, uh, uh, you know, I cannot. I can see why it has been so successful, because it's been so steady. As a financial professional, whoever's investing in this space, the certainty, stability always always commands respect and premium, which is why I think Bitcoin has been successful. Do you think having uh, certainty around how many coins will be ultimately issued has a premium?
I think it's easier to understand, and anything that's easy to understand naturally gets more adoption. It was also the first mover, and it revolutionized the game. And massive respect, Satoshi, for doing this thing. And and so first mover advantage and simplicity are really valuable. Lesson in that for all the nerds in the space who have super complex things, and they're like, you're just not going to get adoption if you just stay in complexity, because people inherently stay away from things that are complex. Period. Now, some people will dig into it, but if you want adoption, how do you make the complex simpler in order to get people to use it? That's a really interesting question to be solved. And so, yeah, fixed supply, yeah, makes sense. And but Bitcoin, I think, was designed in the financial crisis. The past one, 2008, was when it was really created, and the white paper came out, which everybody should read. I would recommend it's 10, 12 pages, and even for nerdy programmer stuff, it's actually pretty easy to understand and fascinating.
That's
And
true.
solving the double spend issue, that was the core issue of kind of a digital asset. How do you not double spend, right? Which has its own inflationary problems, and taken to an extreme. And so, the fixed supply for what it is, yeah, it makes sense. It makes total sense. But there are other things that don't have fixed supply, and there's a good reason why they don't have fixed supply.
But
But
then you have
every
to
solution is different.
but you have, I mean, that's the problem I have, Bobby, and maybe I'm looking at it from a wrong perspective. Let's take Ethereum, right?
You
If
have
you
a beautiful brain, Umed. No, there's not a wrong perspective. You're a smart guy, and everybody has different experience, and that's what creates this robust discussion that helps people kind of see the blind spots we have and see the validity other people have, to really find solutions that bring things together and work for the common good.
Yeah, so back to that question though, I want to just, get this thought out, and the reason why I'm doing this, by the way, viewers, is that Bobby is an amazing partner to hash out a lot of ideas, and it's always an amazing talk with Bobby. So back to the Ethereum question, right? If you do not have a supply cap that
Yeah.
is cast in stone, right, then you are inherently trusting a third party, whether it be I don't know, Vitalik Buterin, whoever else is developing the code,
Yeah.
and a bunch of miners, to accept a different monetary policy. Now, if the monetary policy was fixed and changing it in a decentralized way was is always hard, then you could have a greater confidence about how things would progress in terms of how many tokens would be issued. And as a holder of an asset, you always are concerned with somebody else coming in and diluting you. And a case in point, not case in point, but a hypothetical would be that if a cryptocurrency does not have a cap supply, and then somebody decides to pay themselves 10% more at the expense of whoever is holding it, diluting them, diluting their, if it's a voting power, they would dilute them in voting power, and diluting them in the price if they decide to dump it in the open market. Then you are opening yourself up to all these governance issues and risks. And how is that different from, let's say, entrusting your life savings and assets and to a government entity? I would say government has some responsibility to their,
No,
constituents.
it's directionally, but it's not, nothing's binary, and this is where a lot of people, it is this or it isn't that. It's black, it's white, it's proof of work. They're just like diametrically opposed, and there's a spectrum, right? And so with Bitcoin being like super fixed supply, and I love that you're creating the space here. So thank you for my passion and your passion. I have a lot of respect for you, my friend. I want to be
Thank
clear
you.
about that. Is yeah, directionally, if there's not a fixed supply and there's a governance structure for releasing, yeah, that's directionally more centralized while also being distributed, because Ethereum has kind of went from proof of work towards proof of stake, so it's kind of like a hybrid in a way. Is kind of how I think of it,
It hasn't
right?
gotten there yet, I have to
Yeah,
say.
no, I understand, but that's the point. Is it's a spectrum.
Yeah.
It's not this, and it's not, and it's the devil's in the details. That there's so much nuance in it, and if the central authority is creating or mismanaging and the community notices that, the community can choose to migrate to another platform, or can choose to have a robust discussion about what the governance should look like. Okay. And in a way that happened in the Bitcoin community, where you got forks for Bitcoin Cash and Satoshi Vision and all that stuff, right? Like there were debates and everybody, and there are good reasons on each side, on faster transaction times, more volume, all that stuff, on how these forks happen that still have a common root. It's almost like a stock split or a divestiture,
Exactly.
right? That has a common history. And in Ethereum as a platform, that kind of discussion has gone on, is going on, and in a way creates, all right, what works for the community based on their interests. Okay.
Yeah,
And
but if you are somebody who's entering this space and you have two different types of asset, one has a
yeah,
fixed supply, fixed schedule, and the other says, I don't know, we think it's going to be a 2% inflation, but it could be more, it could be less. So
well, that's what
inherently,
central
one.
banks do. That's what central banks do. And I pay my mortgage in US dollars, and my
Exactly, but
paycheck
I
comes in
would
US.
say that I would. Well, there's different flavors of central banks, right? If you're in Zimbabwe or Lebanon, I mean,
Yeah.
I wouldn't trust that central bank. And
Yeah.
this
And there's a spectrum, a full
yes,
spectrum there
exactly.
of ranges of trust.
But back to my question. So my question is fundamental in its nature. If you think about it, it's like you have an option, and one is to trust the code, right? That it does whatever it does, and the other is that you trust a person or entity or a group of people to actually do whatever is right, and not to dilute you. So in the second one, in a case where there's no cap, the one thing you don't have is assuredness about how many bitcoins or how many digital assets will be produced overall. And
Yeah.
for a person who enters the space with the expectation that my digital assets won't be diluted, that is not automatically an option. Whereas if you come in and you say, okay, I can live with some uncertainty around the inflation, but get the utility that they're promising, then I'm willing to make that compromise. The good thing is that they don't have to make that compromise if they come to Cardano.
See, I'm, yeah, we're in an election year without getting political, but like everybody in their front yard has, the sign here in America that says, so and so 2020, right? I think your background, Umed, should be Ada 2020.
2021, I would say. Yes. No, I'm very psyched about this technology, and I completely admit that I may not have a full knowledge of other platforms that are being developed, and I know that there are avalanches, there's Algorand's of the world, and things like that. It's just that this platform is so rich and so robust, and it's developing so fast that I can barely keep up. As a podcaster and a pool operator to actually, soak
It's
everything in.
It's fascinating. I mean, when I got into crypto, I thought it was one thing, and I describe it as like, when you're always chasing the carrot, right? That's kind of one of these analogies, like, oh, I want the reward, and like the carrot, if it's on a stick out in front of you, I think of crypto as like the whole digital asset and blockchain ecosystem is this carrot that's out in front of me that I'm reaching for, and the closer I get to it, the more the pole extends further away from me, and the bigger the carrot gets. It's like the more you like, it's just so for those of us that have curious minds and are nerdy, like, man, you get in all these rabbit holes, and as you have done, and you've been very thoughtful in looking at the whole ecosystem, and you found a digital asset that you have a lot of confidence in for very thoughtful reasons, just like many other people have it for others individually or collectively. I'm personally a believer in diversifying. If you choose to go in the ecosystem, diversify.
Well, that means that you don't know enough about the ecosystem.
Yeah. I love that. Which, well, it also means that there's way more that I don't know than I do know or can know.
Yeah.
And therefore, and also as a supporter of the ecosystem, because I believe in it personally, just in what I've learned. Hey, I'm going to come in and just, stay diversified, be supportive, and share what I've learned, just like you're sharing what you've learned in this podcast format, to help people make sense of what are really disparate perspectives and really thoughtful technological solutions and a range of political and geographic philosophies, right, all around the world, that makes it so robust and interesting.
Right? Absolutely. Bobby, if you have any other visuals, I would like to basically go with that and see if you have any insights from your presentations that you are known for.
Yeah, no, I think I have just a few, but being a financial advisor, I can't help but go back to this. I've said it in many forms, but I think it's a really important model. Is this that whatever you do, whether you're a technologist or somebody who's considering investing in the ecosystem because you view it as like an equity or something like that, each of us has to kind of think about, all right, what's our capacity for risk? What's your willingness to take risk? And then what's happening in the macro environment, right? Whether it's kind of money that's flooding in or coronavirus or whatever is happening in your country. And all three of those things come down to what you think is right for your situation. And knowing that my situation is different than UMED's, is different from others, whether it's from an investment lens or from a technology lens of being in the system, each of us has this infinite spectrum kind of across the planet of how people choose to view the asset classes here, right? And if you can kind of understand that, I think that's really important, okay? Because it's for some people and it's not for other people. So kind of the financial advisor in me just has to have that disclosure and also share that. And also acknowledging that different people have different interests. And if you can, in whatever you're talking about, or if you can question it, or if you can ask people why, or why, kind of like 5, 6, 7 whys, and you can onboard new information that helps you be better informed about what's in the space, right? Because like Umed was saying, and I was saying, it is fascinating when you get into it, and it's also still highly nascent, right? But I think is going to be growing personally, but it could be volatile and up and down and sideways, just like it's been, and that's just kind of the way it is. So that's the one I'd like to close on, just for kind of context, other than where we start. I got to go back to the beginning. There's a couple other little nerdy slides in here that didn't come up, but just this, like, understand the spectrum of blockchain, the protocol, and all that, and Cardano is working kind of in blockchain type solutions as it's also working in crypto solutions, right? I mean, it's kind of a hybrid there, and so there's a robust range of things and features and problems that it can solve. But in anything that you're reading out there, understand, what is it? Is it purely a Bitcoin conversation? Is it a broader crypto conversation or a broader blockchain conversation? That framework, that's the grayness. That's the spectrum I'm talking about. And if you can understand that richness, you'll dive in and it just becomes an even more fascinating space. Okay. So anyway, I'm obviously a fan of the ecosystem. I'm a fan of yours, Umed. I hope that
Thank
what
you.
I've shared has been helpful. Um, and
Absolutely.
and I know our 30-minute discussion turned into 2 hours of nerding out here, but I mean,
Hey,
it's fun stuff.
it is absolutely fascinating. I'm gonna have to basically have two parts to this discussion. I think it's going to be a fascinating conversation for people to listen to, and that's something that I like to bring into the ecosystem, a crypto ecosystem, especially in Cardano, where we have our own bubble. So having access to you and you having access to crypto is actually very valuable for people
Yeah. Well,
to
and
realize.
it's also appropriate for you to cut this in half because just like with other cryptocurrencies, people they think, oh, there's one stock, you can only buy one stock. One Bitcoin is too expensive. Well, you can just buy a fraction of a Bitcoin. Well, guess
Exactly.
what? You can have a fraction of a podcast too and split it in half of that, right?
Absolutely. Well, last question, Bobby. Um, I don't know how much you've looked into Cardano before this, but if you were to make a price prediction for ADA, which is the Cardano's cryptocurrency for at the end of this year, which is not much left, and the end of next year, what would you think that would be?
I love your question, and I do not predict the future on price changes. And
Okay.
that's just I personally, I've considered reallocating some of my assets to Cardano, and that's a personal decision for me because I think I should be more diversified in the ecosystem, and I think there's some really good cases. And so I am considering that right now. I have not made that choice, but if I do, I'm the kind of guy like I'm going to hold something for 3, 5 years, right? And I'm not a fan of trading. I stay away from trading. I'm an investor, right? I think long term, and so if I'm going to put money in and I'm going to hold it for 5 years, I'm going to first use it kind of a risk asset that I can, afford losing, and I'm not going to have to sell my house, right? I'm not going to go in all in bet. But what's the right kind of diversified investment for my situation, and I'm going to hold it and see what happens. So that's my non-answer to your question that wanted an answer, but
No,
it's honest.
oh, it's honest, and I respect that, Bobby. And if you have any
Thank
other
you.
parting thoughts about anything you want to share with my audience, now it's the time.
Well, thank you. Well, first off, it's a pleasure to be together with you, and for all the folks here, I hope you've taken something away from the conversation that helps you. And I would just say that the more you read, I mean, I had a rule when I first got after mining, like I was like, I'm gonna spend an hour a week just like researching stuff I don't know about crypto. There's just YouTube videos, other things, and in addition to the normal conversations, and I was going to conferences, but I was like, I just started like anything I didn't understand, I just started researching it. And I think for those of you that are really considering the ecosystem or want to get deeper in, look for more information. Look for things that disconfirm what you think is truth in. And if you challenge it, that helps you have a better understanding of what is there and what isn't. Because I see a bunch of articles that are very thoughtful. I see some articles that are against it that are thoughtful, and I see articles that are against crypto that are also like I read it and I'm like, yeah, okay, you've glossed over some stuff. You're missing some points, right?
Yes,
And
it's
but I had to research a lot and talk to people all around the world in order to have that and understand how to hedge it myself. So education is key. And control your risk through position size, and that's on each of you individually to figure out. And I'm not recommending anything to any of you because I don't know your situation other than research, 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 and then decide on your own. And the last thing is, if you want to have something fun to check out, go to my YouTube channel, Chord Savvy, and I wrote a song, What is a Blockchain? So you can see me nerd out for 2 minutes on my guitar on my YouTube channel, which is music based, singing What is a Blockchain. And hopefully that at least brings you a laugh or something out of this whole conversation.
I will leave the link to his YouTube channel down below in the comments section.
Thank you. Spasibo.
Thank you so much, Bobby. It was great having you again here.
Yeah, pleasure to be together, my friend.
This marks the end of our episode today. I hope you like the interview and the type of content that we're putting together. And if you do, please do not forget to subscribe, like, or comment on our videos. It really helps us a lot to build awareness about Slot Leader. I'm your host, Umed Saidov, and I will see you next time.